Hola, bienvenidos, guten tag, whatever other things I can think of. How we doing today? Good morning, Steve. Buongiorno, I like it, Victor. Good morning, Andy. Good morning, Joel. Guys, great to have you today. Um, Andy, I think I just summed up my thoughts on TradingView and using minute charts. Where am I in relation to the small triggers? Is there anything in the way to mess it up? I was having that conversation with someone the other day, and that was essentially what we came up with was where am I in relation to the triggers? Am I on the strong side or the weak side? Is there anything in the way to mess it up? And that's pretty much the recipe for everything we do, guys. Do I have momentum? How is my path? And we're going to talk about that a lot today. Good morning, Miss Linda. Nice to see you. Today is Thursday. It is the 10th of July. That's how they say it where I'm from. And we had unemployment claims at 8:30 a.m. I'm not sure if it spiked anything. I took my exit about 4 minutes before news was released, guys, because news could make the market a little crazy. So I check it every morning. This is the first thing I do. What is going on in the wonderful world of news? Is there anything going on that could mess up my good time? If I see a red box, guys, this is a great opportunity for me to sit on my hands and do nothing. Andy said there wasn't much of a spike, and that's awesome, right? Unfortunately, we don't know if there's going to be a spike. We don't know if it's going to be crazy, if it's going to be volatile. And guys, it's just a good practice to recognize and respect that high impact news. We're going to go through the day, and we're going to do really what we do every day. And I'm going to pull up a lot of pictures, and I'm going to share a lot of things, guys, and we're going to talk about a lot of stuff. In a perfect world, all of you in this room are going to tell me what you want to talk about. I have things that I want to discuss. Guys, I really want to talk about what you want to talk about. I've spent 6 years reading indicators. Now I want to spend and share that knowledge and get you guys to where you're reading indicators. So every time we look at a chart today, and we're going to watch a lot of live market, just so you know, we're going to talk about three things, guys, and I've got it loaded up to put on every chart presented. We're going to talk about momentum. We're going to talk about a clear path. And we're going to talk about the entry area. And we're going to work through all of these concepts, guys, because once you understand momentum and path, your entry area begins to materialize. Once you understand the idea of knowing where you are, where you're sitting in that look, guys, you start to make good decisions based on the advantages being presented. So the perfect trade, the high probability trade, means that each indicator on every chart agrees with the rules for the trade, guys. This is the recipe for what we call a high probability trend trade, and it relies on momentum, absolutely nothing in the way, and then a very clearly defined entry that reduces risk and maximizes profit potential. This is for Ninja Trader on that entry. A medium probability trade is defined as a trade when most of your indicators line up. However, a small issue exists, guys. Your small issue should be one of these three advantages have gone away, whether it is a clear path, whether you're a little void of momentum, or whether your entry area isn't as pretty as you'd like it to be. The second you forfeit one of these advantages, you put yourself into a medium probability scenario. And guys, if you are silly enough to give up 2 out of 3, you're in a low probability scenario, and at that point it's a roll of the dice. It's relying more on luck than what your indicators are telling you. You may choose to take the trade. It's not my job to tell you not to take the trade, but you control the entry. You're in control of whether or not your rules are met. You are in control of whether or not you have the advantages present. Once you start looking at your charts and speaking out loud, what's good, what's bad, what's working for me, what's working against me, it's going to help you make decisions on those entries. It's gonna give you a heads up on how aggressively you may need to manage that trade. So we are going to go through these concepts, and we're going to talk about momentum first. And momentum is not that picture, it's this picture. On both platforms, whether it is NinjaTrader, whether it is TradingView, momentum is the same look, guys. And to have strong triggers means that when your small and large are in the same direction going up and there is space between the two, you have strength in that move. You have strong triggers, guys. And when you have strong triggers on your large chart, that's when the odds are favorable for the market to continue in the direction of the trend. When you see these strong triggers on a small chart, trying to fight them rarely works, especially when you're using those minute charts. In a downtrend, when the smalls and large are going down, when there's space between the two, guys, this is your momentum look. And on those Renko bar charts, strong triggers is strong triggers is strong triggers. This is your first advantage. It's hard to stop a market when you have strong triggers on the large chart. On a trading view chart, the wording is exactly the same. The look is exactly the same. Guys, when you are looking at your trading view, your 15-minute chart, that's your large chart, strength is separation. It's the exact same look. But because this is a 15-minute chart, guys, because this is a big old slow-moving time frame, I'm going to give you a little heads up. Gary, which live chart do you want to see? Give me just 1 second. I'm right in the middle of a flow. You want NASDAQ? I'm trading at 23,051. Gary, you are on delayed data. See that big orange D on your chart? Here you go. Check it out. This right here tells you that you are delayed. So you're seeing about a 10 to 15 second delay on the NASDAQ. No, you're not. You're not. Well, you might be, but not because of that. Um, guys, when we talk about the 15-minute charts on TradingView, and I dropped this picture in the room, and I want you to see something. There are sides of the triggers. If my fast triggers are up, and I am left of those triggers, guys, this is the strong side. This is when life is easy. This is when longs are easy. This is when trend trades are taken. You've got the best look for momentum trades. Guys, this is great. Once the price bars work their way inside of those triggers, this is kind of a transition. You can still go long. You can still look for longs. You may have to manage them a little more assertively. But guys, when these triggers are up, and you are to the right side of them. This is what we're going to call the weak side of the triggers. If you're thinking you want to go long with the trend, it's really important that your 1 minute is in favor of that trade. And the same is true here. Here we have the strong trade, go, everything is easy, life is good. Here we have the transition. Make sure that you manage a little more assertively. And guys, once you get to the weak side of those triggers, that's where trades become more difficult. So it's a little different than the Renko bars. We are embracing these strong trends, guys. This is when I'm holding for the big moves. This is when it looks like this and there's nothing in the way. I love a trend trade. Let it run for as much as it wants to run. But every trade that I take, every time I go to TradingView and I look at my charts, I ask myself that question. Where am I in relation to the small triggers? Is it strong or is it weak? Guys, I am strong to down triggers. The only direction I'm looking right now is short. I'm not trying to counter and go long. I'm hoping that this long gets me to a beautiful trend trade short. And that one question right on TradingView makes a big difference. Momentum is great, guys. Momentum leads the way for a reason. The advantage of momentum is what pushes a market. The advantage of momentum is what helps us break areas. But areas can stop a market, whether it is TradingView or NinjaTrader, guys. When you've got something in the way, that something can stop forward progress. So on your Renko charts, you are going to see Fibonacci resistance, and Fibonacci support. On your TradingView charts, because we don't have Fibonacci yet, you're going to see supply and demand zones. It tells you in the instructions. Chart Prime is the best. Guys, there are free versions. The Algo Alpha is heavy reliant on your resources. But These are areas where the market may stop. These are areas where the market may turn. These are areas that could create a bounce. The same is true here. Fibonacci resistance and support, that's the Renko version. Supply and demand, that's the TradingView version. The other indicators are exactly the same. You're going to see divergence highs. Every time you see a magenta line print off of a pivot, I want you to say to yourself, loss of momentum. Divergence is a loss of momentum. You'll see it as a cyan line from a low. These magenta and cyan lines become lines in the sand where the sellers tell the buyers, if you try to push beyond this, there's a good chance we're going to stop your forward progress. Lines can stop a market. Yellow one-to-ones, if the market's going down, can behave as support. If the market's going up, they can behave as resistance. And then you're also going to see the mid-band, guys. And the mid-band is just a big moving average. If the market's below it, it may behave as resistance if your rules are true. If the market is above it, it'll be green. It may behave as support if your rules are true. Why do we talk about areas? Well, because the people that control the market, they know where these areas are. They built these areas with their previous movements, guys. Fibonacci is nothing more than a physical look of everything these guys have done in the past. It is supply, demand, support, resistance, however you want to say it. Guys, these lines on your large chart are where the people in charge, the large crowd, this is where they're making decisions. This is where buyers buy and this is where sellers sell, guys. This is where entries happen, where exits take place, and you'll know about them long before you ever get to them. On your Renko charts, your small chart is just, it's an immediate idea of what's going on. And when you're looking for a trend trade, guys, your small chart is going to show you what we call a retracement. And a retracement is nothing more than a little pullback, a little down movement when everything here says up. A Ninja Trader, you're going to use this for the highest probability trend trade ever. Rule number 3 for a trend trade says buy or sell that pullback. Do it right at an area, at a fib, at a mid-band, or a yellow one-to-one, and force that area to be inside of those triggers. And guys, this is a trade I've been teaching for the last 6 years. This is a trade that gives you the potential to win up to 70 to 80%. This is your core trade that's going to teach you to read your indicators. And that's exactly what this recipe is. Strong triggers on a large chart, no lines in the way on a large chart, and finding that pullback to an area inside of favorable large triggers. And I'm going to remind you that momentum and path, guys, this is your core, momentum and path. It is a souped up hot rod semi and a big straight road with nothing in the way. It is hard to stop. Fighting it rarely works out for you. So there is a path. Learn the rules, guys. Learn how to identify momentum. When you get to one of those areas, start counting triggers. We talked about this one a little bit this morning. Anytime I reach Fibonacci support, Fibonacci resistance, yellow one-to-ones, even pink one-to-ones if it's the NASDAQ, guys, anytime I reach an area, and they all have the exact same weight, one is not more important than the other. All I'm going to do is count triggers, guys, and if no triggers have gotten through that area, look at Fibonacci support here. This is an area where I want you to just make the assumption this area is going to hold. This area is going to bounce. This area is going to create a retracement that pulls me out of a short trade. And you can make the choice to not trade into areas with no triggers through. If 2 of the triggers are through, guys, we call that a 50-50 look. 50% are through and 50% are not. The area does have the potential to break, but it's not a sure thing, guys. It's not a home run. It's a maybe. And because the path isn't clear, guys, you've really got to lean heavy on making sure that the momentum is outstanding and that your entry is very clearly defined. And then when 3 triggers make it through, when you get both of the small and one of the large up through this area, that's when the breakout is more likely to happen. That's when the advantage is a little bit better. So it's a constant process. What do my triggers say about momentum? What do the areas say about the likelihood to break? Momentum and path should always lead the way for you. So we'll keep talking about that all day long. We'll put it on every chart that we look at this morning. And if you need help, if you need a little reinforcement, a little refresher on momentum and path, guys, don't be shy. Let me know. I am here for you. I want all of you simulating in here. If you're in my room, I want you making mistakes. I want you going at this and saying, man, I'm just learning, but I'm going to take trades and I'm going to try to get into the market and I'm going to try to get out of the market and I'm going to work on moving my stops and I'm going to work on picking targets, guys, and I'm just going to start doing, because doing is how you get to where you want to be. If you want to get there faster, tell me why. John posted in the room yesterday, and I like it. Like a 3-year-old. Why? 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 Why did I do what I did? What did I see when I did what I did, guys? If you annotate your charts, and instead of saying things like, I got in here, you tell me I got in here because of momentum, because of the potential to break, and there was an area inside of triggers. Not only are you telling me exactly how you read your indicators, and if there's a mistake, guess what? We'll fix it. We'll fix it together. But your annotations, you are writing a recipe. You are literally saying, this is what it takes to get me into this amazing trade. I want it to be repeatable, and I want it to be testable, and I want to be able to do the same darn thing every day, because it provides an edge, because an advantage is present when my market looks like this. So please do not hold back on the annotations. I would rather you wrote too much than not enough. I'm gonna let you in on a secret too. I can read your charts without the annotation. I know exactly what's going on your charts. I want to make sure you know exactly what's going on your charts. Whoa, momentum and path. Where is that picture? Egads, little fishes. There it is. Whoops. So guys, practice and post, practice and post. Every time you post in the room, you get a private session with me. Every time I see what you're thinking, you get a private session. And we talk about it. We talk about momentum and we talk about path. This is how you're going to get to where you want to be the fastest, guys. Get feedback. Every professional athlete you have ever watched on TV or seen live has a coach, because coaches are objective. Coaches sit on the sidelines. Coaches watch you perform and then give you feedback on the performance. That's my job in this room, is to give you feedback on everything that you see to make sure that you're doing it as well as you can. The second thing is, don't be afraid to keep it simple. There are, we said this yesterday, there's probably about 10 million ticks in a day in crude oil, for example. You need 40 of them to be a six-figure trader, guys. You need $400 a day to be in the six figures based on your trading. Don't be afraid to keep it simple. Don't be afraid to not have too many moving parts. So I'm going to give you the plans for both platforms. The first one is the KISS plan. Guys, this plan is designed to optimize your chances of success as a brand new user. It's going to be through simulation, study, class feedback, and continuous practice. You will write your own plan. You will see people trading their own plans in here all day long. I'll still go back to them: momentum, path, and entry. Two things you need to know before you sit down to trade and you're not on simulator. Guys, if you're on simulator, go ape shit. Pardon my French there. Go crazy. Go nuts. Get in, get out. Tell me what you saw. Let's talk about it. It makes for an awesome, awesome class. But eventually, you're going to want to test your plan. Know why you'll enter a trade. And the Sunday school answer is because your rules are met, because you had momentum, because the path was clear, because you could define an entry, guys. Rules are nothing more than a description of a pattern. And that pattern is proven to win more than it loses. If you look at the KISS plan, this pattern, this entry, has been proven to win more than it loses. So you need to learn about strong triggers and no terminations and learn how to define an entry, and you can have a trade that you can verify wins more than it loses. And when you know that it wins more than it loses, you will understand that it does also lose. Guys, losing is a normal part of a positive equity curve. And I know I have some new users in here, so I want you to understand that. Every day is not a golden banner day. Every day is not the perfect day. But the closer you focus on the execution of a method that's been proven to win, the more you understand that it's okay to take the occasional loss, that it's okay to take small losses. Your management will aid in that, but it removes the emotions, because now you understand, I never know if a trade is going to win or lose, but I know that I have an edge. And that confidence gets you to the point where you just don't even care if it wins or loses because you know that the execution is solid. And then you have to know why you're going to exit. This is what got me as a brand new user, because the second you're in that trade, right or wrong, the only thing your brain is saying is don't lose, don't lose, don't lose. Don't give it back. You're up $12. Don't give it back. Guys, exits are taken at profit targets or when the advantages that you enter have gone away. And keeping your management very mechanical, you'll be amazed at what it does for you. We took a trade in the room yesterday because the rules were met. And half of you were panicking because of fluctuations. Oh my gosh, it might come get us. This is horrible. And it didn't. It ended up going up right where it was supposed to go. Keep it mechanical. This has your management for that as well. For TradingView, I've got the same thing for you guys, the TradingView plan. It tells you where to find your advantages. It tells you where entries come from, and it gives you a checklist once again to get into the market. Management's a separate thing, guys. So this plan is designed to have you recognize a trend trade, to get you into those HVA trades, and to have you ultimately learning how to take a momentum trade. It says you've got to learn the looks so they're easy. I have done an enormous amount of work for you guys because you're all my favorites. So I'm going to give you this. This is the TradingView plan, guys. This is pictures of all three trades, annotated charts, things to look at. Ideas on management, when not to trade, all of that's there for you. On the Rinko bars, there's your tracking sheet, dropping it in the room right now. The basic rules, what it means to have strong triggers and a clear path in green, annotated clearly for study. Repetition creates recognition. What it means to not have your rules met when it's time to sit on your hands and do nothing. Ideas on entries. People always ask, can I talk to clients? Can I talk to clients? Can you introduce me to a client that uses your system? Guys, this room is your introduction of those clients. So if you're evaluating our software right now, I want you to take a minute to look at what's being posted in the room by Nexgen clients. And what you'll find is that most of their trades revolve around momentum and path. Here's over 500 examples stolen from the classroom from Nexgen clients that you can go back, study, look at, and begin to recognize the patterns. Management, patterns that repeat themselves, a place to build your plan. And then finally, both of these sheets have a trade tracking sheet, guys. And this trade tracking sheet is designed for you to gauge your progress. Every time you take a trade, annotate it, talk about what you saw, what you did, why you did it. Talk about momentum or path, guys. Talk about both of them. Did you have them? Did you not? You'll begin to see a correlation between your wins and losses with where you stood with these two. And then the most important, guys, get your feedback from class. Every time you take a trade and post it in this room, we're going to talk about it. So Pete, you're the last posted chart. You're on the chopping block here. Pete's going to post in the room. And guys, I may take a picture of it. And what I'm going to do is I'm going to come back to the idea is that a trade is momentum, path, and entry. So we're going to go through the concepts. And Pete says we bounced off a midband, triggers rolled down, and gave him strong triggers. And Pete has separation between the small and large. What a great look. And now we know for sure that he has the advantage of momentum. Well, price reached Fibonacci support. Two of the triggers had broken through. So when we talk about a clear path, Pete doesn't have it. But what Pete does have is the potential to break based on trigger location. So now we're starting to break it down. Well, I have the best momentum ever, but I don't have a clear path. And Pete has the perfect entry area right inside of triggers, knows exactly where his stop's going to go. Pete's working with 2 out of 3. So Pete's thought process is because it's medium probability, I will manage a bit more assertively when I take this trade. And what he does is he says with all of this momentum coming from a termination and the potential to break, I'll take a clearly defined entry and I'll get paid at the area that is causing me problems. And Pete, this is a great looking trade. It's a medium probability trade. So great job on the termination that reverses the market. Great job on the momentum. Awesome job recognizing that it was only the potential and managing assertively when you get back to trouble. Pete, outstanding trade. Guys, every time you post in my room, we're going to do this. We're going to talk about those three concepts. If there's something that you did great, we'll talk about it. We'll cheer for it. If there's something that maybe you could have done better, we'll talk about it as well. This is where I would tell Pete, getting in at the area inside of triggers reduces risk. But Pete's going to say, you know what? Because of that divergence and because it's only the potential, I'm going to force a confirmation bar. I'm going to force the market to go in the direction of my trade because Pete knows that he's in control of the direction of those trades. So that's our plan for the day, guys. We're going to go back to momentum and path on everything. Pete's going to take that feedback. If it was perfect, he knows that picture goes in his plan. If there's something that could have done better, if there's a mistake that was recognized, a challenge with the reading, guys, you will get that feedback. And what happens is you'll start noticing that that feedback repeats itself into terminations, into terminations, into terminations. So now you don't have to wonder what happened with the trade. You can say, wow, I keep trading into termination conditions. That's a behavior that I'm going to want to fix going into the next day. So come back and study these spreadsheets every morning. Study your trades every morning. What worked? Momentum and path, guys. Momentum and path. What didn't work? Trading into terminations, jumping in on the wrong side of the triggers. What felt easy? What felt forced? And guys, if you do this every morning, if you take 3 to 4 minutes to go back and look at what you did yesterday, it's going to set you up and give you a mindset for success, and it will accelerate the learning. The people who post the most typically make the most money. The people who take the most pictures and annotate typically read their charts the most accurately. Guys, I'm at over 5,200 pictures this year. This year, we are just into the 7th month. Why do I take so many pictures? Because even when I take trades, I annotate all day long. Every trade I take, I go through, I talk about it, because my job as somebody that wants to be a professional day trader as a career is to make sure that I have an edge every time I enter the market. So let's look at some live markets. And we're looking at the S&P right now. So I'm talking to my new users. I'm talking to Naeem and who else is in here? I got Jerry in here, Ollie, Frank, George, Caleb. This is my list. Let's take a picture and let's just do a chart read together. The first thing on the Renko charts that I'm going to look for, guys, is the market going up with a green background? Is the market going down with a red background? And we do this on the most current bar. The first printing bar on your large chart is all you need to define direction, momentum, and path. So when we look at the large chart, I can say because of the red background, the market's going down. I'm looking for my rules to be met for short trades. I can look at the trigger lines. Smalls are below the large, space between the two. Guys, direction is down, momentum is strong. I have the advantage of momentum. And then I have to say, have I reached an area? Guys, I've reached yellow 1-to-1s, a mid-band, and 2 Fibonacci supports. So once I do this, I say, hey, where are my triggers? All of my triggers remain above. Guys, this is what we call a termination condition. This is an area that may stop the market. This is an area that could stop the market. This is an area that could produce an untradeable bounce. There's the same termination condition right here. Created a bounce with a loss of momentum, created a bounce with another loss of momentum, and you can see that change happening on a smaller, faster chart. So what I have to say to myself is I am already missing a very important part of it. And guys, I'm going to tell you right now, we've done the math. You'll probably lose about 80% of your trades taken into termination conditions. You'll get lucky just enough to think it's a good part of your plan. And then when we talk about the entry, guys, the entry rules say that you're going to take a pullback to an area inside of triggers. That's your split in the triggers. It is 7 points, $350. Your stop goes where the market shouldn't on the other side of those triggers. Is anybody in this room willing to take a trade into an area that has the potential to stop the market with $350 risk? Only you can answer the question. Caleb, you're waiting for your approval on NinjaTrader so that you can take screenshots too? No worries. You know you can take screenshots without an approved account from NinjaTrader. Did they set you up with Snagit or Capture software, something to take pictures of your screen? Because you should have demo mode on your NinjaTrader, which means that you can have live data, you can practice, and man, simulator's amazing. You don't have live feeds yet? Who is your sales, your client advisor? Because NinjaTrader should have a simulation mode for you, or a demo mode. If it doesn't, you can sign up for it. Just use a different email. Do you guys see what the market did right off of that termination condition? Everything reversed. Small triggers are screaming up. Large triggers rolled. Demo mode expired. So I'm saying, Caleb, a little sneaky. So let's say I used mn at one.com as my email. I can do mn1, just build a new one at one.com and get a fresh demo while I wait. Just something. If not, that's okay. Enjoy the class. Pay attention. Ask questions if you have them, please. Even without pictures, you are cordially invited. So guys, do you see how the very basics said, hey, don't go short? And look what the market did. If you went short, that's what we call avoidable losses, guys. That's what we call taking a trade that you know has less chance of winning than it does losing, and being okay with it. And guys, avoidable losses tend to drain accounts. Where is my crude oil workspace? There it is. There's your strong trending market. Everything says down. Price reaches Fibonacci support. None of the triggers break. And guys, there's a bounce happening right there. Somebody knew about that big blue line. Somebody knew about it, the people in charge, and they didn't stop until they got there. And guys, there may have been opportunities on the way down for you. There may not have been. Not every tick is your tick. This market's going to trade billions today. We're going to find a way to capture 400 consistently. Good stuff. Anytime you see 3 losses of momentum in the same price range, guys, that's a heads up. That's a termination condition. And when you get a termination condition, add a termination condition, that should be an even stronger signal to you. Don't go short. This isn't your trade. This is not your best chance of success. Does that make sense? I hope so. What's our trading view read? Whew. Yeah, that was a big spike off the open, wasn't it? Holy smokes. This is the NASDAQ, guys. My first question, does the market say up or down? Green says up. Let's do the read on this one. Where is price in relation to these triggers that are pointing down? Guys, we're on the strong side of down triggers. Smalls are below the large. They're pointed down. And price is trading left of the triggers. Guys, I'm only looking for short trades. So my large chart read is I'm coming from an area, strong side of down triggers, look for a way to go short. Does that make sense, you TradingView people? Where am I coming from? What side of the triggers am I on? So guys, the other question that I ask myself, the other thing that I ask myself, is there anything in the way to mess up my short trades. And obviously this was an opening spike, but guys, look, there's an outer band, there's a zone. There's a lot of reasons for this market to potentially bounce. We'll see what happens. Well, they decided to rail right through. I love the opening. Right to the mid band, right to the zone, right to the VWAP. And guys, we're in a little pause. I don't have a clear path. I do have strong triggers. Let's get below these areas and look to continue with the momentum. S&P, I'm above the small triggers. They're starting to roll. I have room back to the zone. But this is strong triggers against the trade. It's okay to let them slow down. It's okay. You don't have to be the first one in. Let it show a little change. Crude oil. This is what's happening at that termination condition. Your Fibonacci was right at that 1-to-1. That 1-to-1 is also a zone. No reason to go short into it. No reason to take a loser. Gold, weak side of up triggers, but the small chart is pushing up. Wait for a little agreement for shorts, or wait for some strength and get to the other side for longs. There's an awful lot of waiting in trading, guys. 90% of your day is going to be doing nothing. 90% of your day is going to be waiting for advantages. So while we wait for some advantages to come into play, I'm going to start clicking on some of the charts that were posted in the room. We did a lot of talking this morning. Guys, if I'm waking up having my coffee, I certainly don't mind doing the chart reads with you. All right, Paul got us going. Termination condition. Smalls are down, larger up. Not momentum yet, but good look off of the termination condition, but not momentum. He's got a good look for momentum on a small chart, and I want you guys to see this. And let's just blow this one up. Paul had 1, 2, 3 areas with absolutely no triggers through them. Guys, it's easy to say because of this termination condition, I think the market's going to go down. I hope the market's going to go down. Paul had 3 reasons to not go short. And guys, when those large triggers don't follow the party, that market's likely to close right back to them. So if we go back to the basic 3, and I'm going to do this on most every chart today, guys. If I go back to the basic 3, I didn't have momentum, nor did I have a clear path. Is that a good trading plan to optimize your chances of success, having one of 3? I don't think so. So my thought process goes to, when 66% of my advantages are gone, I'm cool not trading. I'm cool not taking that trade. I don't have to rely on hope. And Paul knew it. He went back and said hopium. That's code for hoping the market does something that your indicators say that it's not likely to do. When I say clear path, how many ticks before a termination do you consider it a clear path, Jim? So Jim, are we talking about NinjaTrader, or are we talking about TradingView? Because they are a little different. And I'll get you the perfect example for either. Which platform are you using? Do you open up TradingView every morning? Ninja, there we go. So on NinjaTrader, let me show you exactly how we define that for entries. And I'm going to do it through pictures and a little bit of interpretive dance. So bear with me. Not really. It'll just be pictures, Jim. I don't know why I called you Jim. There's no telling. I saw somebody's name Jim. All right, so on the Renko charts, and what I'm going to talk about is the high probability trend trade. The idea that when I have strong triggers, and I have not reached the area, how many ticks until it's a clear path? Well, trigger lines will define your clear path. So when we talk about a clear path, we're talking about how many triggers are beyond the area that could be problematic. So if I'm looking at a termination condition, we're going to do a lot of pictures here. So when I'm defining a termination condition, in order for an area to be a termination condition, there we go, you have to let the market get to the area. Once it gets to the area, you're just going to ask yourself, where are my triggers? In this case, all the triggers remain below resistance. So what we have is a termination condition. Absolutely no long trades into that area per the rules. Price reaches Fibonacci support. Where are my triggers? All 4 triggers remain above support. No trades in. So once you can identify a problem, you can start through the process. So right here, price reaches Fibonacci resistance. Can you give me a Y if you see that all of the trigger lines are still below? That in the moment is an absolutely no trades into that area. Does that make sense? Trigger lines will tell the story. It's not a matter of ticks. When 2 triggers break through that area has the potential to break, but with only 2 triggers through, both small, and 2 triggers below, we call that a 50-50 look. 50% of my triggers are through, 50% are not. This area does have the potential to break, but I'm going to be real aggressive on making sure that I still have momentum and entry because my path isn't clear yet. When 3 of the 4 triggers get through, the likelihood of a breakout goes up, but we don't consider it a clear path until all 4 triggers break above Fibonacci resistance. That's when Fibonacci resistance begins to behave as support. Or, I've got a picture. I'm all about pictures, guys. I think pictures always tell the story. Let me find it. I thought I had a good picture. Here we go. No triggers through. No trades, not a clear path. This shows the potential to break, and this shows that an area has been broken. And the reason we don't use ticks, and let me show you this exactly why we don't use ticks. Ticks are the absolute smallest increment that a market can move in. So every tick is just a tiny little movement, and you can see, whoops, you can see right here, well, they got 2 ticks below, right? But the trigger said absolutely no shorts. And here you can see they got 6 ticks above, but your trigger line said absolutely no long trades. Does that make sense? So we're going to let the triggers tell the story. We're going to let the triggers let us know whether or not we have that clear path, whether we need to be a little more assertive with our management, or whether it's okay to just pump the brakes and do absolutely nothing. So I want you to embrace the idea that the triggers will always tell the story. Does that help on the ticks question? I want to take it one step further though, because when we talk about room to targets, your large chart's going to look like this when it's time to look for an entry. When the market is going up, when 3 triggers are through the area, when you have strong triggers, do you see how close it is to that line? And that line could be problems. And you only have 8 ticks of profit potential, right? And there's not a lot of you in this room that feel good about only making 8 ticks. Some of you do. I want more than that. So the idea of the high probability trend trade, guys, the entry rules say, when the market is all the way up here at 97.05, when my rules are met on the large chart, I'm going to wait for a reversal bar on my smaller, faster chart. I'm going to wait for that small chart to actually start to go down. And when it does, here's kind of the magic of the methodology, guys. You can define where the retracement is most likely to go by using those large and synthetic triggers. So I look at my chart and I say somewhere in this range is where that little push down is likely to go. But we refine it even more. The market is most likely to bounce off of areas inside of triggers. So your high probability trend trade entry comes from about right here, down here at the bottom, here at the area inside of triggers. That happens to be all the way down here at Fibonacci support, which means that your new profit potential is somewhere in the neighborhood of $320 as opposed to the 80 just jumping in. Does that make sense? So let price reach in order for it to be a termination condition, but understand that you're gauging profits from where your entry rules are met. If you just jump into the market up here, you've got very little room to make money. If you patiently wait for that best entry, you've got a lot of room to get paid. There you go. So did I just answer it with that one? You're going to gauge from where your entry is. So let me show you what I mean. If I jump in at the very top of this move, I have $80 potential. If I jump in the middle, I've got about 200. If I get in at the rules-based entry, I've got about 300. So until price reaches that, it's a target. You will base your profit potential based on where your entry comes from. Awesome. So let's go and see if we can find an example of that. Man, market's been doing all sorts of stuff, hasn't it? All right, so here's a good example. And I'm just going to do it on the small chart for you, 452. If my large chart rules are met, the distance to the fib here is a few ticks. The distance from the pullback to the area inside of triggers turns into almost 4 points. So always gauging from the pullback to the area. So first I'm recognizing where my problem spot is, and then I'm making sure I have room to get back to that problem spot. Good question, great question. Termination works, pushes it up, termination, termination, no momentum, can't go up, can't go down, can't push the market. Do you guys see how what the market is telling you right now is that you're better off waiting than hoping? It's going to be easier to not think you can take a trend trade into the support that just held. And it's going to be easier to not expect a market to go up without the advantage of momentum. This is the hardest thing you'll ever do, ladies and gentlemen, sitting on your hands and doing absolutely nothing. Great questions. And guys, remember, I have to scroll up and down to get back and forth to questions. So if I ever miss a question, if I ever miss a comment, don't let me get away with it. It's never intentional, I promise. All right, Paul doing some replay. And I think I already built this picture, but we'll do it again. So Paul, he's looking at his chart, and Paul says, strong top, termination that reverses the market, no momentum. All right, I'm going to cross that out. Don't have momentum. Don't have a clear path. But he has a well-defined entry. So we're just working off entry, right, Paul? Paul says he has a third chart that he's not showing that was the strongest trigger look ever, which is why he takes this trade. He manages at trouble, holds the second one to the next trouble. It's hard to feel good about it with just two charts. Paul went to a third chart. I'm going to warn new users, the more charts you add, the more you're going to get talked into trades that maybe you shouldn't be a part of. But once we get momentum and clear path and a pullback to areas inside of favorable large triggers, Paul, that's your easy trade, man. That's the easy trade. Or talked out of trades you should be in. That's true, Jen. You did a little testing with that 21 as well, didn't you? Too much to look at. I agree. I have been described as too much to look at as well, so I get it. Check it out. A trade is momentum. Bum, bum, bum. Smalls are below the large. It's not the best space, but it's pretty darn good. Clear path. All of my triggers are below Fibonacci support. It's behaving as resistance. Pull back to an area right at the triggers. Well defined. Guys, these are the easy ones. Nice trade, Paul. These are the ones that you don't have to sit through the dance, typically. These are the ones that you're very calm when you take them. These are the trades that just set up and feel good. Nicely done, Paul. Whew. All right. Don't have momentum. Don't have a clear path. I hope. Man, that didn't work, did it? One of the things I'm going to encourage you guys to do, and this certainly is not trading advice. I don't give it. I don't want to give it. I want to talk about chart reads. No momentum, no clear path. Guys, when you practice, pretend it's real. Because what happens is when you get lucky on simulator, you believe in that luck. When you get paid trading in determination conditions without momentum, you believe you're a badass. Man, the market bows to my win. The reality is you got lucky. You got lucky, guys. And it's what we call a short-term victory that produces long-term failures. You can identify your advantages, guys. You can recognize them. You can see them. You can say them out loud. There's going to be a point where you transition from being a trader that hopes to a trader that's confident. And it's when you stop relying on luck and start doing the same thing every time, guys. The most confident, successful traders that I work with, their trades look the same. All right, so this was yesterday's. Was this yesterday's? This skinny little 15-minute candle with tails on both sides is called a doji. Andy, respectfully, it doesn't matter to me because my plan has absolutely nothing to do with dojis. Where are you? You have both triggers up, right? Doji candle with tails both sides is indecision. So Andy's trading a little different plan. He's teaching me to speak his language. Let's just look at it. Trend is up. Smalls are up. Large are up. You're on the good side of the small triggers. Everything says up, and dagnabbit, Andy, you find a way to get paid. Pretty awesome, right? You had strong triggers on both charts. You had nothing in the way. You bought a small fluctuation, and you went with the advantages. This, Andy, is a recipe for success. Trigger set up, strong side of the triggers, small chart confirms it makes some money, right? And the question that I ask, guys, is, Andy, what does this doji candle 15 minutes ago contribute to your success here? Because that's where the doji was printing, right? Nothing to do yet. You called it indecision. I see everything up with nothing in the way. I call it a trend trade. But because it was against triggers, you could have entered right here at the close on the correct side. You got in on the other side of the triggers. But when everything says up and nothing's in the way, I'm looking for a trend trade. Does that make sense? I love your annotations because this is repeatable. What you're doing is you're saying, man, this is what I see. Mark, here's what it means to me, right? But can you have an engulfing candle if the candle hasn't printed yet? This is me like just asking for my own. That's an engulfing candle, right? But in the moment, it's not printing. So I don't know yet. That's one of the problems, not problems, but one of the challenges that you'll have on looking at such a high time frame is that it takes 15 minutes for one candle to print. 15 minutes. I took a picture of that spike in oil. Whoops, get back there. Guys, that was 15 minutes. That was from 67.45, or no, from 67.60 all the way up to 67.80. It's hard to know what's going to happen inside of that one candle. So Andy, you did an awesome job. I don't know what this candle's going to do, but in the moment, everything says up, life is good. I'm going to go up with it. I love how you did that. That was just a question for me. I'm gonna Google engulfing candles and learn more about them because I think it's cool when you have an understanding that contributes. Absolutely, use it, guys. When you have a plan that works, when you have something that has been proven success. Of course, if you had that, you probably wouldn't be here with us. But if you have something that accentuates, that highlights, that makes it better, guys, it's okay. Use it, right? Tell me how you use it. Tell me, and the question is, how does it make your trades better? How does it work its way into your trading plan? Because I see 1,000 things a day. In one chart, I see all of my triggers down. I see no clear path. I see a strong top. I see a loss of momentum. I see all my triggers above support. I see a potential entry area. I can see 1,000 things. How does it fit to my rules? How does it fit to my rules? The engulfing means strength. The doji just means nothing doing. So Andy, does the engulfing have to print to be an engulfing candle? That was my question. Because the body has to collect everything, right? Has to engulf everything. So Andy, just going back to it, this is my own knowledge. If this bar is still printing, it can't be an engulfing candle, right? Not until it's done printing. So this is a candle with the potential to engulf, but it has not yet given me what I need to know that it's engulfing. My trigger lines give me exactly what I need to take that long trade. Does that make sense? So don't sacrifice your knowledge, but always ask yourself, what does this doji candle have to do with my plan? The doji candle says indecision. The triggers say up, the small chart says up. Does that make sense? There's so much noise in the market. There's so much noise in the market. Simplify. It'll take a lot of the stress out. Watch this. I don't have momentum or a clear path. I'm not going short. That's my chart read. My rules aren't met. The same way my rules weren't met right here, and it kept me out of a loser. The same way my rules weren't met right here, it kept me out of the loser. The same way I didn't have momentum here. What time was that? 7:42. Nor did I have areas inside of triggers. Kept me out of a loser. 3 things is all it takes. Does that make sense, ladies and gentlemen? I'm not smart enough to look at 1,000 things. You probably are. I'm not. So I choose to go with momentum, path, and entry. That's what I teach in this room because it gives the newest of the new students the highest chance of success as you work with this software. Great stuff. You guys are killing it this morning. All right, Paul. Andy, I'm not knocking your stuff. Please understand that. I am not knocking what you're doing. Path of least resistance, right? I'm in Washington State. In November, I'm going back to Texas. My friend in San Diego said, hey, are you stopping through on the way home? No, it's 1,200 miles out of the way. Path of least resistance, guys. So check it out. Paul, you had strong triggers, right? JN sent you to the dark side. When has JN ever talked about doji candles and engulfing candles? Unless you guys are having private conversations, I've never seen him do it. Oh, the ale class. Well, that's separate, right? That's a different thing. I like it. Use what you know, Andy. Use what you know. And you're teaching me. You don't realize this, but you're teaching me. When I look at your charts and I read your annotations, man, I get smarter. But I do try to go back to basics, to simplicity. The goal is, how do I make money consistently in the fewest steps possible? Momentum is a great start. It's only the potential to break. It's not a clear path yet. And Paul, you had a beautiful entry. And I look at the language on your charts, guys. I look at the language on your charts, sucked into it by the small chart. Well, this is the perfect 50-50 trade, guys. This is the absolute perfect. Let me see if I can find it over here. That wasn't it. I take a lot of pictures. Well, I have no idea where that one went. But I posted a picture in the room. Here we go. Nope, that's a different one. Guys, it was momentum. It was potential to break. It was the perfect entry. It was a medium probability trade that just didn't work out. And sometimes they don't, guys. Sometimes they don't work out. Here it is. So the thought process becomes, because I have momentum, because I have the potential to break 3 triggers through, because there's no divergence, because there's strong triggers, because there's a clearly defined entry, I'll take this trade. I'll give it a shot. It's medium probability. I'll manage it assertively. The loss of momentum without a clear path becomes an exit condition. It all goes back to 3 things. Andy, don't you put that thread of wisdom on me. Paul, this was such a good trade. I probably would lose this one with you based on the advantage, based on all the advantages on that chart, especially coming from a strong top. It's an awesome chart read, dude. Awesome chart read. When you know what you're getting into, you know how to manage it. And I lost my place. Did we see that one? Yep, we saw that one. We saw Andy's. Did we see this one, Paul? We did. That one was great. Scrolling down. New users, pipe up if you have a question, please. All right, Pete. Let's read his annotations. This is a counter trend trade, looking for a bounce off the mid band. Strong bottom, trigs rolled, odds favorable, hit the mid band, and Pete says, I sure hope it goes down. From a termination, fighting trend, fighting momentum, Pete says, I hope it goes down. I think hope is the operative word, right? Everything says up on every chart, and it's coming from a very key spot. Pete says, you know what? I'm going to go short. What Pete does is Pete says, okay, I'm at least going to get to the other side of these triggers. I can't find any reason on God's green earth to go short here. Pete saw something. That's a counter trend trade. Fights everything. You're going to win these every now and then. They are. Pete, counter trend trades are based on hope. You know what counter trend trades aren't really based on hope, Pete? Hold on. You know I'm going to do it, right? Hold on. How do I take advantage of a strong top or bottom? How do I do that? HVA trades, momentum trades off of termination conditions. Those will look like counter trend a little bit, because when you take an HVA or a momentum trade, your large chart may not have rolled completely yet. It might still be a little bit up. It might still be a little bit down. but at least you've let a termination condition hold. At least you've let triggers roll instead of just saying, man, I sure hope that midband holds. That one moving average, I sure hope it reverses the market completely. And again, guys, I refuse to tell you how to trade. I will tell you from my experience, when you fight strong triggers, you're more likely to lose than win. When you trade into termination conditions, you're more likely to lose than win. And a lot of times I think you have to ask yourself, guys, is there enough going on in the market? Is there enough movement in the market to reach your goals without having to fight everything? If you're new, you don't believe it yet. You believe every trade is the last trade that will ever present itself. If you're experienced, you should understand that when a market trades $174 billion a day, finding 400 to 500 really isn't that difficult, and you don't have to fight strong triggers. You don't have to trade into termination conditions. You may choose to, and Pete, that's fine. But you didn't even have the gap theory in play here. Like you didn't even have this look that said, yeah, you've got a fighting chance. You literally went against this guy and he let you win. You got bumped off of the bumper, missed the spikes, didn't get burnt by the pipes, and the last 8 tires didn't run you over. You pulled one off on the market. Good job. Guys, I'm obligated to say it. This is what the room is for. I love it when you win. I am supportive of your wins. I get excited about your wins. I want to see you guys in the market all the time. I want to see you guys consistent. I want to see you guys looking for the best of the best. Now on TV, it's a different look, isn't it? You're the strong side of the small triggers. Triggers are breaking through the zone. And you just took a trend trade when the small chart slowed down. So guys, this is an awesome example. Here, it looks psychotic. This is Renko bars. On minute bars, Pete had a fighting chance, right? Did this chart affect Pete's decision here? I don't know. This chart all day long. Triggers roll, everything says down, room to trouble, right? It's awesome. Not counter at all. This is the difference between Renko bars, which may produce 50 bars in 15 minutes, and minute bars, which take a little longer, a little bigger. I love this one, Pete. Pretty awesome. There it is again. This is Pete going, yeah, but Mark, look, I can fight freaking everything and get paid, so suck it. That's cool, Pete. I like it. Here you had the gap theory to help you at least. Guys, until you start sending me checks, I want you to remember that your wins and losses mean nothing to me. This is a room dedicated to chart reads, dedicated to speaking of advantages. And if I see you fighting advantages, I'm absolutely obligated to point it out. And when I see you trading with advantages, I am absolutely obligated to point it out. Those damn termination conditions. So Paul, and I'm going to do this, hindsight. If I would have seen this, I would have entered long, and life would have been amazing, and I would have made a metric crap ton of money. Right, Paul? But what you really had was a weak bottom, not a strong bottom. Small triggers broke through. You had 1, 2, 3, 4, 5 areas that haven't been broken yet. You did have momentum. And guys, hindsight tells you that you would have been a rock star. So when you go back and look at a chart, go back and ask yourself if your rules were met, right? Go back and ask yourself. So Paul, if we write this out, I have a weak bottom. I have no clear path 5 times over. I have divergence from a 1 to 1 on my entry chart. That's a red flag. Is momentum enough to feel good? And only you can answer that. Only you can answer that question. Is momentum enough to outweigh a weak bottom, no clear path 5 fibs over, divergence from a 1 to 1? For me, if I'm sitting here and I'm looking at this chart, I just say something clever like, it's just not my money. If it goes up, that's cool. That's great. I don't have enough going on to make me feel like I want to risk any money on that. I hope that made sense, Paul. It's not whether it's right or wrong. Is it right or wrong for you? Advantages will help you a lot with that. Good morning, 10K. All right. So past the zone. Pinched and rolling, getting ready to cross over. It already crossed over. So one of the things, Andy, is this is changing your thought process from Rinko to minutes a little bit. So this bar was 45 minutes ago. This bar was at least 15 minutes ago. So we're looking at the current bar, and the current bar is pretty awesome. The small triggers are down. You're on the strong side of the small triggers. So the large chart read, oops, come on, call out. Large chart read is, hey, I'm below the zone. My small triggers are down. I'm on the good side of them. Let me go see if my small chart has anything in the way to screw up a short trade. And if you had taken the trend trade, you had room. And here you just kind of jumped in, right? Just sort of jumped into the trade, and they came and got you. Those sons of guns. If you're just going to jump in, that's cool. It's going to work, right? And Paul, that's your right to take that trade as many times as you want. It's my right to tell you that it's into a slew of terminations with problems everywhere, every time. Eventually, I'll see your rules written on a trade, right? So Paul, as soon as you write with momentum, my rules say ignore everything. As soon as I know that that's a part of your plan, I'll say, Paul, that long fits your plan perfectly, brother. The challenge is, every time I watch you trade into termination conditions, you lose. And every time the market does it when you're not looking, you talk about how much you could have won. So I see patterns in you, brother. I really do. Hindsight is a mother scratcher because it makes you believe that you would have caught every move perfectly. Something to think about. Andy, so on the momentum style trades, the advantage comes from pulling back to the area, if that makes sense. No worries. No worries at all, Paul. This HVA wasn't even there, Andy, when you took the trade. That HVA formed when this bar formed. So you were already in, maybe trying to anticipate it. It didn't exist yet. If I'm going to jump in like this, I'm going to use, and I like this. See those two lines on your white bar? I'm going to try and cover up some of this just so we can focus on those two lines on the white bar. Those two lines are the high volume area of the bar. That's where the most sellers got together and said, let's keep selling. if you just jump in, you can use that for stop placement. Does that make sense? Your large chart looked great, man, and you had not quite odds favorable, so it's hard to call it a momentum trade yet. So if you're just going to jump in and hope, that line, those two lines kind of represent where the sellers got together and said, this is where we're going to fight if they come back to it. So when they start breaking above it, you can just go, okay, I'll wait for the next trade. Does that make sense? That's where you can start using these lines on those jump in trades a little bit. That's a little trick John Novak taught me. So let's see if we can find kind of an example of that. With everything going down, Andy, I don't tell you when to get in and out of trades. I certainly see it as a management opportunity, right? Because what was your entry? You took the jump, the fudge in, right? That's all you did, is you just jumped into the market. Where is my advantage gone? How do we answer that question when you just jump in? But that area wasn't there yet. Oh yeah, those two lines. So you're anticipating that area coming in. So if I jump into the market, and I can't see the price on it, if I jump into the market right here hoping it goes down, that line tells me where the sellers drew a line and said, hey, no more, right? This is where all the sellers on that breakout bar collectively said, this is our price where we really want it to go down. If the buyers start racking above that, man, you're on the wrong side of where they collectively said down. Does that make sense? So if I'm just going to jump into a market, let's say hypothetically, because of this look, I jump into the market right here, Andy. I just say, I love the momentum, everything's screaming down. I want to jump into the market. If the buyers can push past that high volume area of this bar, I might be 3 or 4 ticks above that. With this, I might be above a zone. I want something to put my stop behind, something that says more down to put my stop behind. I don't have any rules for this trade at all, except I hope it goes down. Well, at what point does that advantage go away? When I get past the highest concentration of sellers. If I just jump in here, I put my stop behind the bar, and look what it does. It pulls right back to that price, and then it continues down. If I were looking to go short with the large trade, where's a great place to do it? Right at the highest concentration of sellers. Pretty cool, right? So you can use that idea. You can use that idea of where did they collectively say giddy up. Guys, if you're going to jump into the market, have a plan for stops. That's one thing I encourage you guys to do. And I love this. Andy, you had every reason to believe this market was going to go down. It's just hard to manage. It is difficult to manage. Trend trade was the good one. And then here, the HVA shows you, well, there's a good example. This is where all the buyers got together and said that we wanted it to go back up, right? And look what it did. There's your bounce point. This chart was perfect. Is there anything in the way to mess it up? Man, it's a good looking trade. Those are harder to manage, guys. When you just jump in, they're just harder to manage. You had the advantages you needed. Just a little different concept on management because it's more difficult to use the idea of where the market shouldn't go. Pete, we saw that one. We saw that one. Paul, we saw that one. I get lost sometimes, guys. I think we saw that one. Pete, do we see this one? Everything says down. Get to the other side of resistance. Take it to resistance. Nicely done, Pete. Great patience on the scramble. You took it into the zone and the zone bounces. You take it below the zone when the triggers roll. Easy money. Nice trade, Pete. Nice trade. Andy. I think I skipped some. Hold on. Two triggers through. Easy entry. That's the one that we did as our example in class. Nicely done. Large chart still good. 29 is right here. There's that potential to break trade. And then 1, 2, 3 divergences. You take the short with the potential to break in 3 divergences, and you dodge a bullet and make money on the way down. And I'm guessing your TV chart helped with that decision. Nicely done. Paul, beautiful trade. Everything says down, 3 triggers through. Paul, you let it break, pull right back to the fib and the triggers, and you quit on it. Show me a picture, please, Pete. Was the trend trade up in that zone? Andy, I'm not sure which picture you're talking about just yet. And the one that we looked at? Trend trade up on your chart, Andy, right here? Good morning, Miss Cindy. Are you asking if the trend trade would have been up? Below the zones, strong side of the triggers. Everything says down, right, Andy? Below the zone, strong side of the triggers. Hold on. Pulls back to the mid band. Closing below. So it was a trend trade short. Does that make sense? Not up. Not up at all. You're on the wrong side of everything. There's a zone above you. This would have been looking for short to go with the large chart. Does that make sense? The red zone on the 15 is above you at this point, coming from the area. Can you give me a Y if that makes sense? All right. Paul, are you with me? Didn't follow stop rules beyond the trigs. So let's turn this into the rule for everybody. Andy, where do trend trades come from? They come from the midband, right? Hold on, let's do this. No, check it out. Let's talk about it. Let's look at the trend trade checklist. And let's put it on your chart. Bum, 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 bum. Whoops. Hold on. Get rid of that. $15-minute, not directly into zones. There's a yes, 100%. 1 minute, not trading directly into 3 divergences or against a trade or zone. There's a yes. Buy or sell a close on the correct side of the small triggers. So that would be the sell on the correct side of the triggers. That's your trend trade. That's it. That was beautiful, wasn't it? That was easy. Guys, have a checklist. I promise you it's going to help. A checklist will help so much. Good stuff, Andy. Let me get back to where we were. That wasn't it. We've already seen that. Sorry, guys. There's a lot of pictures, and I'm double-clicking. I don't mean to. All right, so Paul mentioned I didn't put my stop on the other side of the triggers. I don't know what that means, Andy. Didn't put my stop on the other side of the trigger. So guys, let's talk about an entry concept when taking these trend trades. Let me go to my 101. Let me go to class. Let me go to my entries. Let me find one with the least amount of writing on it. This will work. All right, so when we talk about the high probability trend trade entry, guys, I want to show you something pretty cool. Reversal bar begins the pullback. You define where the retracement is most likely to occur using these triggers, large and small, or large and synthetic. You define your entry at the areas within the triggers. Is everybody with me on that? This is the entry for the high probability trend trade. So what have I done? What I've done is I have defined where the market may retrace, and I'm using large and synthetic triggers, and I'm also defining where it's more likely to bounce using areas. So what I'm saying is that when my rules are met, this range right here, this is where the market is most likely to retrace. This is where the market is most likely to bounce. In the simple plan that I gave you guys, it states that your initial stops go 4 to 5 ticks below those triggers. 4 to 5 ticks below the retracement zone, below the areas for a bounce. And that is initial stop placement for these trend trades. What happens, and unfortunately it happened to Paul, is Paul left his stop right inside of that retracement zone. And guys, if you're gonna take a trade, you've got to commit to that trade. You've got to have a reason for exit. You got to have a plan, and that is where regret comes into your trading a little bit, because you had it dead to rights, Paul. You knew 100%. A little bit of trust in the methodology goes a long way. And then Pete, the crude background is white versus green or red. That's a bar, not a background. Is that what you're asking about, Pete? So this is your market flow. That's what you call a breakout bar. So when you get an up bar breaking out, that's what we call a breakout bar. And you see them everywhere. You'll see breakout bars all day long. 5 ticks worth of trust, Paul. These breakout bars are what create the HVA lines. So watch this. This is a good lesson. Good question. And this is great because it's coming from a zone. So let's go through the process. So the area holds. The G was silent. And not only did the area hold, but you get a breakout bar down from the area. That's like, oh my gosh, not only is it a place to not go long, now they're rallying for the down. That pink line, when the breakout bar is confirmed by a second down bar, you see the HVA line. So the way these are used is this is what creates that pink line. And what is an HVA line? It is the highest concentration of sellers in that breakout bar. It's that line in the sand if the buyers test it. And that's where your HVA trade comes from, guys. It starts with an area that holds. You recognize the breakout bar. If it's confirmed with the down bar, you get this pink line. Your rules say sell the hell out of that pink line. Does that make sense, Pete? I'll give you guys this picture. Good question. Good question. Let's see where we're at. Did that one, did that one, did that one. Got that one. Pete, everything says down. You go down with it. We saw that one. Hey, good morning, Wayne. Does it matter what color the dots are? Sometimes they're green, sometimes they're magenta. Because inside of every bar, whether it's green or magenta, so on this bar, that was the highest concentration was sellers at that tick. The highest concentration was buyers at that tick, sellers at that tick, buyers at that tick. One of the things these dots will do for you, Pete, is you see how the highest concentration of sellers was at the very bottom of the bar, but the bar finished up anyway? Those are stranded sellers. They tried and they failed. Those are stranded sellers. They tried and they failed. They tried again and they failed. Here, the buyers tried right at a key termination condition and they failed. Does that make sense? So it's just the highest concentration within the bar. This one has buyers and sellers, kind of middle of the road. There is a lot of information in there as you grow with the market flow a little bit. All right. High mom and strong trending market. High momentum in a strong trending market. 30 bars in the same direction. Guys, you can assume that momentum is good. And Wayne says, check it out. With everything up, with nothing in the way, with a pullback to an area inside of triggers. Nope, outside of triggers. Wayne says, this is where my advantage is gone. But with this look, let me get up with confirmation and ride it up. Beautiful trade, Wayne. Beautiful trade. 30 plus bars in the same direction, you can assume momentum. Absolutely nothing in the way. Oh, you know what? Let's do this. Let's do this. So Wayne has momentum because it's strong trending. Wayne has a clear path. Absolutely no areas reached. Guys, what Wayne doesn't have is an entry area. He can't say there is no area inside of triggers. 2 out of 3. So Wayne says, I won't just jump in at a mid-band. I'll wait for confirmation. And then you went one better, Wayne. You waited to get in on the correct side of those small triggers because you know when price gets above those, it's going to have to close back below it to continue down. Great trade. But it goes back to those very basic chart reads, ladies and gentlemen. What's in favor of the trade? What's against the trade? How do I handle it? Because there's something against it. Wayne gets in on the right side. Nicely done, Wayne. Good annotations, very clear. See who's next. Miss Trina. Two trades. Strong top, no triggers through. Red both was 50-50, was not paying attention to big red line. Duh. So not quite a clear path. And it creates some challenges for you. And it looks like he pulled one off, only gave up a tick. And then when it does give you that potential to break, Trina, super easy momentum trade. Nicely done. And I like that you post this. Because if you get nothing else out of this, Trina, trading into lines is difficult. Trading from lines is typically easy. Nicely done. We all make mistakes. Yours cost you a tick. We all make mistakes, guys. Never the end of the world. Get your head back in the game and wait for the next trade. Nicely done, Miss Trina. All right. That's one of the things that I really want to stress with you guys. It's okay to make mistakes. It's all right. We all make them. We all make mistakes. Learn from them, recognize them, grow from them, post them in the room. Let's talk about them. Wayne, termination, triggers roll, large down, smalls up, right off resistance, and you say they close the gap. I'm going to try to go short and go down with momentum from the area, and it works out nicely for you. Nice trade, Wayne. Momentum from a termination, not a clear path. A little more conservative on the entry. Termination on the large chart, rolls on the small chart. Wayne gets in on the breakout bar up. Nicely done. Straight from the zone. This is awesome. This is good use of TradingView. It fights the triggers, but you're from a zone. The small chart rolls. Guys, there's advantages there. Nicely done. Target at the triggers. So you let it close the gap back up to the triggers, Wayne? And then on this one, and I like this, here was where to get in. Instead of hoping it goes up, letting it roll, it sure makes it easier, doesn't it? I'm still, and I hate to admit this, I still get excited about zones. And it's like sitting on my hands, waiting for the small chart to say, okay, let's do it now, right? Let's do it now. It's amazing how often they reach the areas. And once those triggers roll. With this look, good stuff, Wayne. Great trading, man. That's a tough hold. And that's even a better entry. The difference between it might hold, it might go up, and it is going up. Victor, you're making pictures of your mistakes with notes. I love that. I think it's more important than pictures of good trades. I think learning how to weed out the bad. Guys, the good's not hard. Stop. Yeah. So you were in at 29 and your stop was the other side of the zone, which means you had over $300 worth of risk fighting strong triggers. If you say it out loud, Wayne, I have over $300 per contract risk fighting strong triggers. I know, and I'm just giving you things to think about because, Wayne, when you get good at anticipating your shots, when you start seeing these zones, you get excited, right? An entry here, hold on, you can say, I have $100 per contract. But now I have everything in favor of it. And Wayne, one of the things that I had to do, and I'm just going to let you in on how my growth went with this as well. If I believe this area should stop the market and my stop has to go below it, it must mean that I believe the market's likely to get down to that area, right? That's a tough look. Even that's a tough look. If you had done it, at least with the smalls on the other side, gives it a fighting chance. Close on the correct side of the small triggers gives it more of a chance. Things rolling does more. And you have to work through this when you switch from Rinko to minute bars, Wayne. So I think you're right where you need to be with it. It's a little adjustment. It's a little adjustment. And then there it is right there, right? Instead of getting in on the way down to it, let it hit, get in on the way up, and just awesome. Pete, that was that counter trend again. All right, 10K. You ready? Similar to the range chart. It is. So, Victor, on TradingView, market flow is a part of the range chart. Or market flow is a part of that 1 minute chart. Because there's a lot of great information in the market flow. All right, 10K. Made some changes to ES being run over a lot and stop loss being hit. Went to old ways 14.271. I think it was 8.2, not 7.1. Taking longs and shorts once the setup comes up. Going in at the 10.2 mark or mid band with +9, +17. First one out +9 and below fib. Second one +9. After second divergence was expecting fib, but it didn't make it. So first one, momentum, potential to break the 1-to-1s, pull back to an area inside of triggers, get paid, beautiful. Let it get above trouble, awesome patience, 10K. Strong trending market, clear path, buy the mid band, get paid. And then 10K, once you get 3 divergences up here, that's when the party's over. Does that make sense? Nothing wrong with exiting with a divergence, but in a strong trending market, that mid-band's just another entry, the same as it was here. It's the exact same look, the exact same reasons. And then it's that next divergence, that's the one that kills it. Great trading, dude. Nicely done. Sometimes going back to basics isn't a bad idea, huh? Termination, all the way to a termination. Everything rolls back up. You take the trend trade for the continuation. Nicely. Great patience. Let's see what you said. Waited for the reversal bar on the small chart. Entry should be 2 ticks or better. Small trigs on the large chart turned in my favor. Synthetic on the large stayed green. There is a termination on the large chart. It's what I do if the small turns in favor. Then I use the 9.2 marker reversal bar to enter. Out at the reversal bar on the small, altered the original +21 on second to the fib. Took profits at areas. Should have waited for the reversal bar, but it came to the fib. That's the reason to get out. But if you follow the original plan, the fib was reached. This is awesome, 10K. Termination. Everything rolls up. You wait for the conservative entry and just ride it up. Really nicely done, man. Losing momentum directly into all the termination conditions. So here's the one where you throw some hope into it. Waited patiently for the price and triggers to go above the divergence on the large chart. Then pull back to the fib and midband in the crosshair. Held at 2 ticks below the tail on the small chart. Then it decided to get out at the second contract. At the high of the day, initial plan was the next fib. Even if it's in sim, I altered the plan. Why? I got to write the question. Got to write the answer for this question. I love it. The one thing that you didn't mention on this one, 10K, was the fact that you were trading directly into 2 Fibonacci areas that haven't given you the indication that they want to break. Your next tail up here, where you have that potential 3 triggers through, it's a much easier trade. And it's cool. You held through it and got paid up top. Great trading, 10K. What's the live market doing? My goodness. Odds favorable momentum. Whoa. All the triggers above. Clear path. Ooh, the only thing I don't have is an area inside of favorable large triggers. And if they hit that red line, guys, I have to be patient. How many termination conditions have held since we've been looking at charts? 1, 2, 3, 4, 5. Oh my gosh. 6 perfect reasons not to take the trade. I hope nobody lost money in those. If you did, I hope you wrote that you traded into termination conditions. Termination reverses the market, reaches a fib, no triggers through, and ladies and gentlemen, when those large triggers are a full bar away, one of the patterns you'll begin to recognize is the market will sometimes close the gap to those large triggers. We call that the gap theory. If price accelerates away from those large triggers, hits something solid in the form of Fibonacci or a midband, large triggers stay above that reversal bar marker, guys, it may close the gap. If you try to take a trade at the midband thinking, you know what, it's a strong top, I have momentum, I'll trade into termination conditions, that's where the market should not go. 24 ticks, $240 worth of risk above where the market is trading, above your entry. It's a lot of risk. Make your choices. Joel, Chart says no long, weak triggers at a termination. You went short to get to the termination. So your really big chart says 3 triggers through, not the best look, but not broken. Your middle chart says, all right, here's momentum, but you have a lot of stuff in the way. Waited for the confirmation bar with a very tight stop. So what are we confirming, Joel? This is what I like to ask. What am I confirming? This says no longs yet. Can we agree? 3 triggers through. Most of your triggers are below support. There's no momentum on the chart to the upside. I mean, smalls are still inside. I think it's fair to say that's no longs yet. This chart says termination, which for a lot of people is no longs, but momentum maybe. This confirms the termination. There's your termination. You have an astronomical amount of risk, so you wait for the confirmation bar. The confirmation bar is not a confirmation bar because your rules aren't met. The confirmation bar is a reversal bar in the direction you're hoping it goes. And what it does is it gives you a place to put your stop. We're not confirming a whole lot of goodness because this says no, this says it's going to be tough. There's a lot of problems with the trade, right? Joel knows it. Look how he gets paid at the first sign of trouble. And he protects his investment. Guys, I can't tell you not to take a trade into a termination condition. I'll never tell you to take a trade. Tell you when you know what you're up against, and there it is right there. Very tight stop. Manage aggressively. Nicely done, Joel. As soon as I know things aren't great, it gives me the opportunity to be a little more aggressive with my management. All right, Jen, strong bottom, odds favorable momentum, no clear path. You choose to trade directly into trouble. It works out for you. And when it gives you no indication of slowing, there it is. Can I address the waiting for confirmation? Maybe a lesson here. This could stop the market, right? And that's all we're doing is we're identifying this is where the market could end my good time. It already did once. Jen, from here, 1-to-1's right at the mid band. From there, I've got a lot more room to manage. But I guess more risk, right? From a confirmation, I've got a lot less room to trouble, but it establishes risk. I guess when you guys talk about confirmation or entering on reversal bars, make sure you have room to get back. That's it. And you did. You had room to get back. If you look at Joel's, he had room to get back. If you know you're trading into trouble, guys, one of the things I like to talk about is make sure that your entry gives you time to manage because you're already trading into issues. Both of you did a great job. And the one thing that you'll start to weigh out is, would it be better to just get in at the area? Would it be better to get in at the area? Or does confirmation make you feel better? Does a half bar make you feel better and use a stop? As long as you're weighing through these, that's all I'm saying. When you know what's wrong, make sure you have room to correct if something changes. Good stuff, guys. Well, and Jen, you had a lot of risk at the area, right? So let me show you how the math works. If I wait for the 1-to-1s at 90, I've got $200 of risk. If I get in on an up bar, I've got $140 of risk. I feel like you made the right decision here. But weigh that out. What if you had favorable large triggers, right? What if you could get in at the area and only have 8 ticks? That's one of the beauties of knowing where your stop goes before you get into it. That's perfect. I love it. This risk is more than this risk. You took a lower risk entry because it's a lower probability trade. You did it perfectly. I'm trying to turn it into a lesson for everybody. Joel did the exact same thing. He took what would be the lower risk entry because it's a lower probability trade. And you guys are in control of that. Pretty cool. Holy smokes, it's almost 11 o'clock. I've been flapping my gums. I'm not saying you got lucky, Joel. So let's do this, Joel. Large chart says no, right? So any long is a direct fight against this chart. This one has a termination. Trading into a termination is the recipe for financial suicide. I'm not saying you got lucky. Did you recognize the termination? Mid-chart has triggers changing, but will have to be very careful. Why? Why do you have to be very careful? Say it out loud on your chart. Because I'm trading into a termination condition, and a termination condition is a recipe for financial suicide. So if I choose to fight my large chart and my mid chart, do I have enough going for me to warrant $140 per contract with 10 ticks to trouble? So if we talk it out like this chart says absolutely no longs. This chart in the most basic rules says no longs. And this chart from your point of entry gives you 10 ticks of profit potential to trouble with $140 worth of risk. If you were a financial advisor and I sat at your desk and I said, despite seeing all the negatives, I'd really like to risk more than I have the potential to make in my portfolio, I probably wouldn't choose you as my financial advisor. I'm not saying you got lucky. You managed it very aggressively into trouble, right? As long as you know what you guys are up against, you make the decision on whether or not that's your trade. That's not my job. You make the decision on whether or not you're willing to take that chance. You have to make those decisions. I can't make them for you. What I can do, oh man, here we go, right back to it, is I can say, think about what's good and bad and make some decisions, right? Guys, medium probability trades are like 90% of your trades. Like 90% of your trades. So if you pull the large chart out of the equation, Joel, let's go back to it. Go back to it. Now, if I get rid of that third chart that said don't do it, now what do I have? Now I have, whoops, the best momentum ever from a strong bottom. I've got a clearly defined entry area where I can take a shot. Now it just becomes a medium probability trade, right? You take a good entry, you manage at trouble. If it breaks, rock star. So the challenge with the larger charts is you've stacked against it. And Jen said it earlier. This will talk you into the wrong trades, and it'll talk you out of the right trades sometimes. So be careful when you start going multi-level. Great stuff, Joel. I'm going to say on 2 charts, you took a very calculated risk into an area with awesome management. That feels better than I got lucky, doesn't it? I love the 21, but Joel, I think that when you added the 5-1, you negated the effectiveness of the 21 because a lot of your trades are going to contradict. Joel, look at that checklist. Odds favorable, potential to break, pull back to an area inside of triggers, and just runs. Beautiful trade, Joel. My other Joel, we're doubling up on the Joels today. Russ, can you talk about the yellow 1-to-1s on this one? They had you worried. Which yellow 1-to-1s? Right here? Let's do it. You want Joel's charts. Yeah, no kidding. All right, so Russ, we're going to go back to basics if that's cool. You all right with that? Because this is a lesson for everybody. Cool. Horizontal lines on a large chart, Russ, can stop the market. It can be Fibonacci resistance. It can be Fibonacci support. It can be yellow 1-to-1s. It can be divergence highs and divergence lows. Are you good with that? Horizontal lines on a large chart, any one of these lines is where the large crowd's likely to make decisions. And you can see it here. See that big tail on the charts here? That's the fight. That's the fight. That's the fight. That's the fight, right? And all of those fights happen right at key Fibonacci areas. Decisions are made at these areas. Does that make sense, everybody? And they know about them. So when price reached these yellow 1-to-1s, Russ, your head, I hope, said, I probably shouldn't trade directly into them. All of my triggers are above. But then your triggers start to change the story a little bit. 2 triggers blast through. 2 triggers haven't made it. So what does this say? This says, you know what? I have the potential to break based on trigger location. You with me so far? That's a momentum-based trade. You've got, where's 99.25? So 99.25. So what did you do? You did trade directly into those yellow 1-to-1s. Does that make sense? You took a trade directly into these yellow 1-to-1s. But Russ, your trigger lines through momentum and having 2 of them through said, Russ, this area has the potential to break, right? Did you recognize that in the moment? That potential to break look? What are you doing? You're banking on that potential because of momentum on both charts. So what happens if you get down to 69.25 and look, they did stutter and you get divergence or you get a reversal or something going up? You manage out of your trade. So the idea is that you can see the lines, let the trigger lines tell you whether or not the potential is there. No, large chart says potential. Large chart says, Russ, these might, they could, they may, but it's not guaranteed. But that momentum suggests you have a shot. The momentum on the small chart suggests you have a shot. Getting price below the areas suggests you have a shot. So you're trading the potential, right? Pretty awesome. If you break it down like that, what do I have? I have all the momentum. I don't have a clear path, and I've got a awesomely defined momentum trade entry. 2 out of 3. If something changes on the way to the next fib, Russ, manage. If nothing changes on the way to the next fib, have a good time. And you know what's cool? You know what I like about your hold here? Is this entry is just jumping in. That entry is a textbook momentum trade. It's like the double whammy. If you didn't get this one, you could take that one. And both of them said we're more likely to go down. Does that make sense? Any line you see on your chart, just go to the triggers. Let them tell you the story. Yeah, that would have been like a second chance if you didn't take the first one. Really nicely done. I find that if I go back to those concepts, guys, and I know it sounds like a broken record. What does momentum say to me? Momentum says to me that I should draw arrows on the chart that don't belong. No. Momentum says odds are favorable for the market to continue in the direction of the trend. So when I look at strong triggers, that's what my head says. My head says, man, the odds are favorable for this market to continue down. That feels advantageous. When I see that split on the triggers, when I see all that momentum and the small triggers absolutely blasting through, I say, with all that momentum, and my smalls smashing through, that area has the potential to break. So if all we were looking at is a large chart, guys, and you had to say this to yourself, looking at that, look, the odds are favorable for this market to continue down, and dag nabbit, that area's got the potential to break because of that strength in the triggers. Does that inspire you to say, hey, let's go look for an entry? With all of that good stuff, put those back on there. That should inspire you to look for an entry. And because of the advantages over here, getting in away from the fib, trading to the fib, all you're doing is you're using a small chart to capitalize on all the goodness that the large chart was giving you. It's a beautiful trade, Russ. But if you always start on the large chart, guys, and you always go back to defining your momentum and path, it really does add some warm fuzzies to what it is you're looking at and what it is you're looking for. Miss Cindy, I would say that's a failed 50-50, not a termination. This, though, is a beautiful termination. Price reaches resistance, all the triggers below. So if we move this arrow, Cindy, down to here, this is more relevant to what happens here compared to this anyway. So termination stops the market. Everything's railing down. Don't have the best momentum, but the path is clear. There's your momentum style trade again, Russ. Breakthrough, snap back to the one-to-ones. When the momentum trade fails, it turns into a trend trade, and the trend trade carries you down to the fib. Nicely done, Miss Cindy. I think, and guys, my thoughts aren't that great. Doesn't that make you feel better about the trade than that? Heck yeah, you had things going for you didn't even know about. And does it make sense that when this jump-in trade fails, when the large chart looks like that, it just sets you up for a trend trade? Beautiful hold. Great hold, Cindy. All right, Steve Diego. Let me guess, momentum style trade. Strong triggers, 30 bars. Steve's like, I know this look. Strong trending market. The challenge is here, Steve. Here's your lesson on strong trending markets, ladies and gentlemen. There it is. This reversal bar ends the strong trending market. Guys, it's 30 bars, no reversal bar. So you start over on the way down 100%. Does that make sense, everybody? You guys that are looking for strong trending markets, it's 30 bars without a reversal bar. Once you get a reversal bar, strong trending market is over. So what we do have is a market that's definitely on its way down. Weak triggers, nothing in the way. And Steve, you have odds favorable momentum on your small chart. You get in just below that divergence, and it just doesn't go. And nice management. You make a couple ticks on it. But do you see how it changes? Exit at treble, right on. Do you see how the thought process changes? So the Nexgen momentum trade, Steve, relies on momentum over here. And if this isn't momentum, you don't have a momentum trade. You have a I'm jumping in because of small chart momentum trade. And when small chart momentum fails, it's a great reason to exit. The idea of the Nexgen momentum trade, guys, it's coming from a termination. Otherwise, you're trading the potential of a breakout because of momentum. Let me back up a picture. With the momentum, Russ is trading the potential of a breakout. There's your trade, Steve, right there. Perfect. If you don't have this look on the large chart, you really are. You're hoping that the momentum on the small chart carries it. And great management, dude. And I know NinjaTrader crashed, but these are the ones that are less likely to go. These are the ones that are less likely to run because they're not supported with that strong trigger look over here. Nicely done. Pablo, uh-oh. Here we go. Coming from a mid-band. Good side of the triggers. Nothing in the way. And Pablo, not the strongest trigger when you entered. No worries. Let's talk about this. All right. We're going to do the read together. Coming from the mid-band, bonus. Small triggers up, bonus. Strong side of the small triggers, bonus. Large chart gives you everything you need for the long. Small chart, don't do it, don't do it, don't do it, and check it out. Where you get in, do you see how you have strong triggers? So not only is the large chart perfect, you've got strong triggers. But Pablo, let me give you the little patience piece here. The way you traded this one is you are directly into the one-to-ones. When price gets above it and pulls back to them with odds favorable momentum, that's the momentum trade right here. You are 2 bars early. This one says, I hope the one-to-ones don't hold. This one says, I got above them, and now with momentum, they're most likely to hold to the upside. That is the perfect momentum trade right there. You held through it. It was beautiful. And then you go up and you get paid. And then your second momentum trade was right there off the HVA, Pablo. So if I'm doing this, there's your first momentum trade. Everything says up, you get paid. That's the goal of trading. There's your second momentum trade. Everything says up, you get paid. That's the goal of trading. Nicely done. You were in profits and you trailed your stop. Let's talk about that. So you were probably up here, right? And you said, hey, I'm going to trail my stop. I'm going to keep that point. This is a cool example, Pablo, where you can say with odds favorable momentum, with the large chart perfect, this HVA line is more likely to create a bounce up than it is to just get run over on the way down. Putting your stop where the market should not go really has you holding this trade until it tests it and goes up. And then you can redo your stop right there and just ride that thing up. Does that make sense? As you learn these indicators, you're starting to anticipate, which is awesome. because you didn't quit because it hit your stop. You got back in because the advantages were there. So now you're starting to recognize these advantages. You're really starting to see it. And one of the things that I tell new users, and I'm going to give Pablo's secrets away here. Pablo's about 5 days in with it, with the indicators. The first 3 days feel like this, don't they, Pablo? Holy crap, what did I get myself into? By day 2 or 3, the language begins to make sense. By day 5, you start capitalizing on the advantages that the software provides. Yeah, you'll be at that phase for a while. But Pablo, this is awesome. I get excited when you guys start rocking these things out. All right, Victor. Looking for an entry point for a sell trade. Don't see it. Looks like it's bouncing off the fib at 66.94, but I would be trading into a termination point on the 5-1. Chart looks like trending is changing to buy. Still have all red background. Momentum down is almost gone. No clear path. Sit and wait. All right. So Victor, just for grins, and guys, I can't make you post in my room. Everything said down and you went short. Nice job. This is an opportunity for us to talk about management. Bump, bump, bump. Nope, hold on. That was your exit right there. You made a couple ticks. And then you went long and got run over. And then you went long again, and you may have made a couple ticks on it. And then, Victor, everything agrees. Odds favorable. Nothing wrong on this large chart. And it looks like you took a trend trade, and it was beautiful. And then everything is still going up. You hit a fib, but you held it a little long. Maybe you tried to go long into the termination. It doesn't look like it worked. And then you try to go short with the small triggers coming down strong, pull back to the large triggers. Nexgen started teaching that trade in 2004, and you write it down all the way to trouble. Victor, this is awesome. So what do I get out of this? One, you're not showing me everything, which is cool. You're working on your plan, and you're doing it live, which is your right. So how do we eliminate the losers, Victor? That's what you should be asking yourself. What went wrong on the trades that failed? Was it fighting all the triggers, right? Was it fighting the trend? Because when you had momentum and path, brother, it was easy, wasn't it? If you get in at 91 and you get paid at 17, that's 170. That's another 300, right? And if you would have gotten out at the fib, that's like $400. And you're looking at $800 in that one move, Victor. Does that make sense? Strong triggers, nothing in the way. Easiest money you'll ever make. So if you're not at over $800 in your account, wouldn't it be great to be there by eliminating the losers, by not taking the trades that didn't have advantages, letting that stuff really, man, you know what you're doing. You just got to figure out how to do nothing when it's not perfect. Great job, dude. Great trading. Great trading. I get excited when you guys start to find success. I really do. All right, Wayne. That's okay. We all chase in the beginning, Victor, because we don't believe that the market's ever going to give us another opportunity. I don't know why. I don't know why we feel that way. You ever kiss your girlfriend for the first time and you figure you better kiss her lots before she breaks up with you? Same thing. All right, Wayne, let's see what's going on, brother. Strong triggers down, but you're on the weak side of the triggers, which means that shorts are going to be difficult anyway. You're on the weak side of the triggers, and your small chart says smalls below the large, everything down. I'm not sure why you went long, but you did. I hope it worked for you. Maybe we have the after. It did. You get out at the HVA. Cool. Weak side of the triggers. Small triggers roll. I guess you just get in because of the breakout bar. And as long as you stay on the good side of those triggers, you ride it right up to trouble. Nice. The second one makes it a little more clear when you see it. Trend is down. Momentum is down. Path is not clear. You wait for the small chart to show change, and you take a little momentum style entry to go close the gap to those triggers. And then when they don't budge at the triggers, you just make more money. Nice job. So this one helps a little bit. So, okay, so let's back it up. Wayne sees a termination with the large triggers a full bar away. Makes a lot more sense, Wayne, letting this slow down and take it. I like the way you're using both. Wayne says, I have all the advantages of Fibonacci. I can see change over here. That's pretty cool, Wayne. I like it. Nicely done, dude. Makes so much more sense looking at both setups. Paul says bingo. Old Piney Ski shows up here every now and then just to remind us that when you have momentum and 3 triggers through, buy a pullback to support inside of triggers and enjoy the profits. And when your momentum style trade fails, very often, turns into a trend trade. Paul, great trading, man. Great trading. Guys, that was 2 hours and 15 minutes of chart reads, but we got through everybody's charts. What does the large chart say, guys? I have momentum down, directly into a termination. I don't know what these are. Short trades are probably going to be short-lived, and I feel like we're watching that happen right now. Do you guys see it? Price reaches Fibonacci support. None of my triggers get through. If you took the first short, you got away with one, and now it's going the other direction right off the termination. Smalls are inside of the large, but 3 triggers are through. If you traded into the termination, it was rough, but it did bounce. That's a pretty good fight right at key Fibonacci. I am on the strong side of small triggers up, coming from a zone. A lot of stuff in my way. Large triggers are still down. That's a great transition look. Got to go to work, 29.60 for the day. It sounds like you were already at work, Wayne. Nice job today, dude. Great charts. And thank you for posting the correlation. Where Rinko or TradingView, guys, you're going to find a way when you have a plan. We've gotten away from the strong side of the triggers. We're in a little bit of a transition. We've got some one-to-ones in the way. Everything says up. If you traded from the retest of the zone, maybe an opportunity, not an easy trade. Pulling back to the outer band. I'm going to share some wisdom that John Novak shared with me. When you are outside of this outer band, guys, be aware. Any trades you take, be aware. But that was a zone. The zone held. The triggers rolled. No reason to take a trend trade short from the wrong side of the triggers in a zone. Pulls back to the mid band. Maybe an opportunity to go up. Good stuff. There will be no easy longs until you're inside of that outer band, though. So make sure that you manage anything you do. Weak side of the triggers. We'll see what happens. Absolutely. I'm doing it right now, Paul. There's TradingView. There's NinjaTrader. TradingView takes virtually no resources. It's so easy on a computer. So absolutely you can. Absolutely you can. All right, guys. I'm going to take a second and stretch my legs. I'll leave you with the S&P. Weak triggers, right at one-to-ones. My large chart says longs are going to be a pain in your butt. You guys may have a different plan. If you take a trade, post it. You guys that are new in here, help me out. Ollie and Jerry and Naeem. Guys, if there's anything I can do for you, if there's any questions I can answer for you, if there's any questions you guys have about TradingView, questions that you have about NinjaTrader, please don't hesitate to ask. I'll be back in a few minutes, guys, and we'll get back into it. I'm back. Um, I love that you guys are helping out here. So 452 says, what's the software? So let me read what you guys wrote. TechSmith Capture, but I believe that the capture went away. But Snagit, so if you had Snagit or TechSmith Capture, they were giving you a free year on Snagit. When you look at the download, it looks like the website may be down. If you installed the indicators, it may have already been installed though. You can check by hitting the Windows key. Tech, you may have known this before, don't know now. Still have TechSmith. You can see the picture, but don't know how to annotate on the picture. Usually use the call out tool. Awesome. Morgan, you are a great help. So yeah, 452, it's the call out that's going to let you write on. And yeah, Paul, I don't think Snagit is even 40 bucks. $31.20 for the year. It's on sale. But if you have Capture, it should still work. I think mine died. I don't have it anymore. I've got Snagit. But the idea is the same. The call out and stuff like that. So 452, if you want to just do a little test run, see if you can get it. The call out button, the call out button doesn't work. It's click and drag though. So when you click the call out button 452, left click your mouse and hold it as you go down. So what you'll do is you'll left click and then you'll drag, and that's what creates your call out box. It's hard not being on your computer. It is Jim. Okay, I knew that. I called you Jim earlier. I don't know why. Got you. Your capture is wonky today? That's why no pics? Okay, so maybe capture is wonky right now. I'm a big fan, guys, and I don't ever tell you to spend your money. If you own software and you're going to do this and you're going to do it right, it's worth the $31. I think it's a small investment, but what you get with Snagit, and I sound like a commercial for Snagit, is you get the images, the videos, the all-in-one. You get not only all of the call-out tools, but what you can do, guys, is when you have Snagit, and this is what I like about it, you can take a picture of your checklist and drop it right on there and really start policing yourself. Hold on. Exhibit A. So you can take a picture and you can literally drop your checklist on there to make sure that you're doing what you need to do, that you're following rules. So I'm a big fan of it. When I first started, I had Capture, and my brother's like, dude, spend the money on Snagit. And I said, all right. And it was a great investment. And guys, I use it all the time. One of the cool things you can do on Snagit too, for you guys that are into this, is you can take, well, you could do it with Capture as well. Go to video mode, and when you're ready to take a trade, videotape yourself with audio, and oops, where'd it go? It'll literally give you this, and you can record. And you'll hear yourself say things like, well, I don't have odds favorable momentum, but I do have a clear path. And you know what? It was 30 plus bars, so I've got that strong trending market. That's why I'm going to activate a limit order right here at this mid band. I'm going to keep buying the mid band until it doesn't work, and then just stop it. And it's kind of cool because when you go back and listen to the things you say during the wrong trades, you'll be like, whoa, the hell was I thinking? And when it's right, you'll hear yourself confirming, man, this is a good look. These are my advantages. This is where I want to be. That's an old trick. If you're talking yourself into the wrong trades, listen to yourself talk. It's amazing what you'll say to convince yourself that breaking your rules is a good idea. Fun trick. My brother had me do that a couple times. And it didn't take long for me to not want to do it anymore. All right, guys, we've got, excuse me, we've got 30 minutes. And honestly, I've got as much time as you need me to have for you. What can I do for you guys? You guys evaluating the software right now, I hope that you're seeing just from participation in this room that yes, you can see advantages. Yes, you can see exactly where the market may bounce. All you've got to do is excuse me, figure out your path. And until you figure out your own path, we provide you with one. Excuse me 1 second. Sorry about that. All right, Andy, you had a question right before my break. I'm sorry. I missed that. Thank you for pointing that out. Fair value gap. What is it? What does it mean? In chart prime, dotted lines often represent key support and resistance levels, serving as visual cues for potential price reversals, consolidations, or breakouts. They can be found in several indicators, including the support and resistance, trend channels, order blocks, liquidity void indicator. Morgan, I ate a granola bar on my break, and some of it went in my lungs. So the dotted zones, Andy, potential support and resistance. I mean, that's the easy one. It's just like another zone. If you go to the chart prime library, because I looked this one up before, and you go to the dark, and it is the Dynamics Pro Toolkit, I believe. Pattern detection, market structure. There was in one of these videos, there was an actual explanation, and I believe it was in predictive ranges. But all the answers about those indicators, you'll find them in here. The market oracle, features overview, trend signals reversal, optimizing. But it's the dynamics that does support and resistance. And when you look at it, really, Andy, all it is it has something to do with a gap. So let's do this. Let's see if we can do a little inspector detector. When was the last time the market was at that area? It's been a while. There it was. That was the last time the market traded in that area. Something significant came from that area, and that's why it extends out. Trying to reset my chart view. Just an area to be aware of, my friend. Family-friendly crumbs everywhere. Pretty much. I definitely have to dust my desk after one of those. So Andy, when we get down to these dotted lines, keep your eyes open, right? And I didn't have any dotted lines above. It has something to do with the market getting there and gap fills and stuff like that. I don't know the exact answer, I'm afraid. Um, Paul, oh, there's material everywhere. You're in there. You're in the material. Paul, so here's what I did. And guys, I think this is the easiest way to learn TradingView. The first thing, Paul, and I believe the most important thing, is you have to believe in your heart it's not NinjaTrader. That was my biggest obstacle in the beginning, is I tried to make minute bars behave as Renko bars, and you can't, because inside of this one bar is 15 minutes worth of information. So 15 minutes over here from 18 to 33, all of this is inside of one bar over here. So you use the triggers a little differently. We've got in the Pro Trader funding, under the instructions, Paul, we have, whoops, the TradingView indicators. Oops, nope, that was it. And what you're going to find is that it's not as different as you thought it was. So let me give some of the materials that I did. This is the TradingView indicators. There's small triggers and large triggers. So you already understand that concept. And when they're separated, it's strong. The thing that is different is on a 15-minute chart, because it takes so long, you'll look at where price is in relationship to the small triggers a little bit as well. If they're all up and you're left of them, that's the strong side. If they work their way inside, you have to manage assertively. It's a transition period. If you are below them, this is the weak side. Don't fight your smaller chart. Strong triggers, no reason to fight it. Be on the right side. Paul, there's divergence. There's one-to-ones. There's mid-bands, outer bands. Everything that you used to see. And the only difference right off the get-go is that TradingView is going to have zones instead of fibs. And if you just think of the zones, this is where the market could turn. The same way you think of fibs, you're good. So TradingView turns into, it's the same concepts, 100%. I need a big chart to tell me it's time to go this direction. I need a small chart to confirm my entry. There is a trend trade. There is a high volume area trade to help catch tops and bottoms. And there's a momentum trade. And then I also created, because you know I like to do this, there's the whole HVA, trend trade, momentum, management, no longs. Everything you need, dude, is going in there. And then it's just a little time. It took me a week or two to get over the idea that it wasn't Renko. And because I'm stubborn, I'm so stubborn. And once I let it be what it is, honestly, Paul, you follow a checklist. You've just got to take a little time to learn what the checklist means, what it looks like. And that's where that comes in. It would be like if you wanted to learn to snowboard tomorrow, you would have to remember that they're not skis, I guess. And I'm sure you already know how to snowboard. But does that make sense? It's still going down a mountain. Don't run into a tree. You're just doing it on a little different platform. I don't know. I'm horrible at analogies. But you'll find that it's not nearly as difficult as you think it is. So right now, this is crude oil. My small triggers are down. And I'm left of the small triggers. I'm on the strong side of the small triggers. I'm just not looking for long trades. So what do? I say, okay, I've got a zone, right? And if I get a close below this zone, why don't I just go down with all that strength and see if they retest? Let it start on the large chart. Look for a way to capitalize on the small chart. And there it goes. It's dropping. What could ruin my good time? Well, the zones that we're in could ruin my good time. This HVA could ruin my good time. These 1-to-1s that are printing could ruin my good time. So if I take the trade up here, that's my management point. Does that make sense? But even without having trading view, can you see that the large chart says down and you're on the good side of those small triggers? And look what it's doing. It doesn't have to be hard. It doesn't have to be hard. But Paul, if you make this transition, man, let me know. I love working with TradingView. We have a history. Trade and get feedback. Trade and get feedback. Trade and get feedback. That's a pretty good look. And then Pete, are you still in the room? I know you're one of my crude oil traders. Does everyone remember at 11 a.m., 42 minutes ago, when I made the one little comment, guys, there will be no easy longs until you're inside of that outer band. And sure enough, it bounced right off of it and headed down. Doesn't mean there won't be longs from the good side. There won't be easy longs. Shorts are going to be way easier outside of that outer band, especially with the triggers down. Strong side of the small triggers. What does my 1 minute say? It says there's a lot of stuff in the way, Mark. It's okay to sit on your hands and do nothing. Look at that. Price is right at a 1-to-1. Can't think of a good reason to trade into it. We saw crude oil. Gold, everything is into the zones. You are on the strong side of the small triggers. And your small chart isn't really giving help. The large triggers are down. The small triggers are flat. There's nowhere to go. It's okay to sit still. Sitting still is hard, guys. It always has been. Sitting still is hard. What else can I do for you guys? Steve Diego. It's just fun to say it like that. When I entered price, I was below the 1-to-1s at 63.20 with weakening triggers, not following rules trade. So let's look at it. Tail into momentum. Hasn't reached the 1-to-1s yet. 3 triggers through the area. No areas inside. Yeah. That's a little tougher look, Steve. 1825. And you're in. This is the large chart said take a shot, right? What is that? Oops. I don't want to do a video. Hold on. Let me go back to image. And let me see if I can get both of these in the picture. There we go. So if we go back to basics, and we'll put it in the middle. At the time of the trade, the momentum is, the smalls are still out, but you're right at the tail end of momentum. So we're just going to say tail end. The path, I've got 3 triggers. If things are right, more likely to break, right? In my entry area, I don't have one. My only areas are right here, midband and fib. And Steve, what we might be able to do off this picture is build a little patience. He said one off for peanuts. So one of the biggest challenges is your 1-to-1s were at 1975. And that is right, whoops. 1975 is right here. So it looks like it hit the 1-to-1s. And I might be mistaken, but it looks like it hit the 1-to-1s already before the pullback. The thought process, I think, on this one, Steve, is if I'm going to take a trade into those 1-to-1s, is that enough room to manage from getting in at the top of the bar? Probably not, right? 2 ticks isn't a lot. And they head faked you. They never reached an area for a bounce. Getting in down here at the areas, if you're going to say, man, I'm going to take a chance, leave it a little room to get back up there instead of 2 ticks to get up there. And there wasn't room for you to make anything if things went sad, if things went wrong. Are you sure? I believe you. I'm not calling you a liar. These 1-to-1s were at 63.1975. This is the pivot before your pullback. And it's impossible for me to know if that is 1975. It may have been 50. So you may have been a tick off, right? It doesn't change the fact that you've only got 2 ticks from your entry. But you've got, if you're going to take a shot, using those areas gives you room to manage. And that was the, oh no, it's going without me. Because the reversal bar didn't come from an area, it just came from inside of the triggers. That's the biggest key right there. It's not a confirmation bar if it's not confirming the rules for the trade. Looks like you missed it by a tick. So 100%, right? And they made it. I think that's where utilizing the area pays dividends for you. It just gives you a little extra room for management. Antsy in your seat. I like that you said that. What made you antsy? No room? Write that down on your chart. So when you study it tomorrow, what made you feel nervous? Define what made you feel nervous. And you may want to avoid taking trades with only 2 ticks of profit potential because it forces you into a position of being a little more aggressive. Hey, Marlon, how much of that is mine? Show me the trades that got you there, man. That's awesome. Great job, dude. This is your week? Nicely done, Marlon. Nicely done. All right, Jim, can't annotate with TechSmith. That's okay. You get snag it, but this one didn't work. Odds favorable, clear path, entry above the mid band. So let's take a look. Can I annotate it for you just for the classroom? Force the trade, Steve. I've done that. And guys, I'm the king of broken records. So Jim told me, hey, Mark, I had momentum. Separation between the small and large, life is good. And Jim, you had a clear path. 4 triggers above the fib. Did you count triggers? Awesome. All right. And you had a very clearly defined entry area. So you take the entry, you make $100, and you give 20 back on the stop because of your great entry. So net 80 maybe, Jim? This is 100% the perfect trade with the most Pragmatic management. No, you should have made money. Oh, no. No, no, no. Dag nabbit. Hold on. Oh, are you ready, Jim? Lesson time, brother. My bad. I missed that. We're going to go to entries. All right. The rules say reversal bar begins the pullback. Price is most likely to retrace somewhere between the large and synthetic triggers. Price is most likely to bounce from the area inside of triggers. Let's talk about why great entries make manageable trades. If you were in at, what is that, 34.04? That's so small. So if you were in at 04, that's a much smaller loss. Does that make sense? So the question is, did you outthink yourself on the entry? Did you say, let me wait for it to go up? So the question that I would ask in this room is what made you feel like getting in at 05 was better than getting in at 04? And if you're just learning rules and getting comfortable, that's the reason. And that's a great reason. That's an awesome reason. But what we can do with that is we can say, hey, here's where, that's one line where your trade was most likely to come from. If your entry was here, your initial stop, according to the KISS plan, is down here. Once it goes in the direction of your trade, you've got virtually no risk. You've got $50 worth of risk on the trade. Does that make sense? And it looks like it made it to 06, which means that if you were trading the KISS plan, that's a $100 trade followed by a break-even stop out. They don't all work, but great entries create very manageable trades. Great entries can turn failures into successes. Does that make sense, Jim? It's a great look, dude. Your large chart, you had that thing nailed. Dead, I mean, perfect look on the large chart. Wonderful reason to find the trade. So I would say, if I were looking for a way to grow from this, scroll through some of these trades on the some of the trades, and what you'll see is pullbacks to areas inside of triggers. And I said this the other day to somebody, and I think that this really does help. Annotation really helps long-term success. If you know that Rule 3 says buy a pullback at an area inside of triggers, what happens over time, Jim, is even here, you're calling your shots. All right. Let me make it bigger. There we go. Where should the entry come from? Buy a pullback. There's your pullback. Add an area. There's your area inside of the trigger, somewhere below the top and the bottom of those large synthetics. Does that make sense? And it's this phrase, Jim, it's freaking magical. Because I could watch a live market, and if my rules are met, right? Momentum, potential to break. If I get a pullback, my entry has to come somewhere from an area inside of triggers. Well, all of my areas are on the wrong side of the triggers. I can't define it. I can't define an entry. And I can't use this one all the way down here, because how could I expect this area to create a bounce if the bar closes above it? Do you see how the language says, you know what? Your entry isn't perfect, Mark. There's no areas inside of triggers. Strong trending market. Momentum is assumed. My path is clear. My rules say I need to buy an area inside of triggers. Do you see how that recipe's not met, Jim? Damn it all. I can't clearly define an entry. That's where I'll look for those confirmation bars or something to go up. So what happens for you and everybody else that's learning entries, if you remember this phrase, when the large chart rules are met, this is exactly what I need to see. You'll be absolutely floored. Where'd your picture go? Sorry, I closed it out. You'll be absolutely floored because you will be calling your shots and you'll be saying things like, my only entry comes from an area inside of triggers and there's only one of those. And you'll watch it come together and it's like the market slows down for you. The trade that we took collectively yesterday in the room, we waited for the entry for 7 minutes. We had a limit order waiting at our spot for 7 minutes. Pretty cool. Does that all make sense? I like this though. I mean, your large chart read is spot on. You will find a way. We snipe. Amen, Marlon. How long does it take to trust buying a market on the way down on this chart? Can we address that? I don't know about you guys. That was terrifying for me. You want me to buy on the way down? It took you 3 months, Marlon? That sounds about right. That sounds about right. I think it actually took me a little longer than that. I'm not proud of it. But let me show you why we do it. So when you look at your large chart, guys, momentum and path comes from one bar, just one bar. Entry comes from a smaller, faster chart, and there's typically 20, 30 bars over here. And it's that refinement process, it's that pullback that gets us to the lowest risk, highest profitability entries. But the large chart never blinks during these great entries. The large chart advantages just don't go away. What market was that? That was the S&P. Was that today? Let's look at this one right here. If I circle that tail, strong triggers, 3 triggers through, you'll notice that that tail on a smaller, faster chart is a pullback directly to an area inside of triggers. Do you see it, everybody? That's your pattern. 3 triggers through, momentum, pull back to an area inside of triggers. If I get rid of that circle and I make it a square or a rectangle and just put it around that one bar, the pullback, the bounce, and the continuation, it all happens within that one large chart bar, giving you all those amazing advantages. And it's that recipe for entry, guys, that makes you look like a sniper. Because the language is consistent. Pull back to an area inside of triggers. That's what you're looking for when the large chart says go. Strong triggers, but it hit an area. But let's see what the tail looks like. Pulled right back just below the area inside of the triggers. And you'll see that this is consistent, guys. So if you scroll back on a large chart, you want to develop a little trust, look for strong triggers and a clear path, and circle the tail. See what it looks like. Great way to study. But guys, trust is what makes it so that you can execute. And Jim, that was such a great chart read. And the only thing I can do is maybe help you refine just a little bit to maybe get a little something out of nothing on these trades. And great entries do it. Good stuff. Steve, you said, you know, you like separation trigger look on the 13-2. It wasn't there, but you listened to the siren voice that said you will not hit the rocks. That damn siren song, guys. It gets us every time. 60% of the time, it gets us every time. But Steve, I like that you put that because you have been the epitome of consistency in this room. And you've had the exact same look on every time. And it just proves that we are human, guys, and we will make mistakes. Just recover. Marlon, you attach your entries to the mid band and wait for the triggers. Takes a little hesitation out of me. So you call your shots and just wait. When the market's trading over here, Marlon, you've already got a limit order in place. And you're just saying, all I need is a pullback to an area inside of triggers and just move it. If it moves up, that's brilliant. Guys, that's faith in the plan. That's faith in the software. That's taking one of the most basic, simple entries you could ever have and turning it into a hell of a good week. I'll send you my address for Christmas cards, Marlon. You use the attach function of Ninja. I'm not familiar with that one. So it runs with the midband for you. You attach it to an indicator and it actually moves your entry with it. Oh, that's pretty cool. Look at me. I learned something new. I like that. All right, guys, that's it for me today. Let me end the broadcast and get you guys